A robust regulatory foundation is key to unlocking long-term investment in Central Asia's critical minerals sector. This session will highlight recent mining reforms and the broader regional efforts to enhance legal clarity and institutional capacity. Industry leaders and policymakers will discuss strategies to align regulatory frameworks with international standards, ensuring greater transparency, predictability, and ESG compliance. Through case studies from other markets, we'll explore best practices for strengthening investor confidence and fostering sustainable partnerships. Join us as we examine the pathway to an investment-ready future for Central Asia.
Well, welcome back, everyone. So this session, as you can see, is going to be quite busy because I think it's aligned with the importance of the topic, investment, and the title is Investment Ready Framework. For those of you like myself that have worked on the financial side of the mining industry, there's a few things that I've learned to get projects or jurisdictions ready for investment. I think one recognition that I've learned over the years is capital is extremely timid. Actually, we can call it coward. It doesn't want to be a lead in anything. It's always the first money is the hardest. Then the second and the third becomes much easier. So very privileged to be a part of this panel where we talk about what Uzbekistan could do to attract the capital. So I don't want to take too much of anybody's time. We have 7 presentations, and then we're going to have a panel discussion. Hopefully we'll have maybe 20 minutes or 30 minutes to answer questions. So with that, I'd like to immediately invite Akram Aliyev, Acting Deputy Minister, Ministry of Investment, Industry, Trade of Republic of Uzbekistan. I'm sorry? Oh, it's travel. Okay, so we'll go to the next one. Byron Land, Senior Mining Policy Advisor, Consultant to the World Bank. I'll leave it to you if you want to use this podium. You can use this. If you just want to speak from there, it's up to you. Let's just try to make this informal, but let's generate a dialogue.
Thank you. Well, it's a wonderful opportunity to be here with you all, ladies and gentlemen. And thank you, Alan, for the introduction to this session. In fact, my talk will be region-wide, although obviously we're here in Uzbekistan, and I'm fittingly because what we're observing is there's a very determined government with very clear-sighted about what it wants to achieve. But I will talk about developments in the region. Right. My central question in this presentation is this a new golden age for mining in Central Asia? In our assessment at the World Bank, it has been a long time since opportunities for investments in Central Asia's mineral resources were as good as now. Yet, this is no guarantee that Central Asia will become a significant investment destination. I want to explain why that is. On the plus side, clearly we have moved into a new metal-intensive phase of global economic development, and security of critical mineral supply is central to that. It's become a major driver of foreign policy among large consuming countries. And the diversity of Central Asia's mineral resources, the richness of its mining history, its geographical position as crossroads between East and West, clearly makes the region candidate for investment. However, and I think Ilhan, you kind of alluded to this, globally, the risk appetite of mining companies remains quite low for investment in less traditional areas and the newer, more volatile mineral commodities that are our focus at this conference. Regional governments, whether that's Kazakhstan, Uzbekistan, or Kyrgyzstan, and Tajikistan, Turkmenistan, will need to make key reforms to outcompete rivals for investment. This is global competition for a finite amount of capital. Let me dwell a little bit on the risk appetite for investment among mining companies. Most investment still flows to de-risked mining destinations, principally in North America, Latin America, and Australia. Even Chinese investment outside of China is mainly to these countries. And investment in more risky destinations is still dominated by gold. Western companies in particular make decisions driven by maximizing shareholder value, with fairly limited impact of home country government incentives on their investment decisions. Now, these patterns are changing, but only slowly. And where investment is taking place, it mostly goes into improving the performance of existing mining assets, and the least into finding new ones. There's a focus on lowering costs through mining process efficiency and extending mine life. And developing new mines presents a host of issues, falling returns on exploration spending, longer permitting times, high infrastructure requirements in areas that often have scarce infrastructure or costly infrastructure. Capital cost overruns are legendary now in the mining industry, and there's the challenge to acquire social license. So Central Asian governments need to make key reforms to outcompete their rivals for investment. And just a quick scan across 4 countries. I haven't included Turkmenistan in this. We have had relatively little engagement there to be able to form any views. Kazakhstan clearly is the dominant and most mature of the mining destination or investment destinations. The 2018 Subsoil Code aimed to reduce barriers to foreign investment. And while very well intentioned, the reforms in our assessment have not been followed through with complete implementation. And that's documented in the World Bank's Mining Sector Diagnostic, which was published in 2023. You also had the 50% hike in the mineral extraction tax in 2023. And right now, things hang a little seem to be hanging the balance on certain key reforms. Mining royalty styled on Western Australia's before the Parliament now as part of the tax code changes. We'll see whether that goes through or not. But Kazakhstan does have a clear plan on development of rare and rare earth metals, covering the period to 2028, for which $23 million of budget funds have been allocated. Uzbekistan, well, it's very impressive. The ability of some SOEs to go out to global capital markets with Eurobond issues. It shows that whereas a few years ago, there would have been Uzbekistan, big question mark. Now I think Uzbekistan is on the map insofar as international financing is concerned. And the government has a very ambitious program that also includes Al-Malik issuing bonds. And of course, it's set up TMK with the $200 million that was mentioned by Ilhan earlier today. Moreover, all of this is being backed up by tax reforms already in 2022, and the new subsoil law that became effective this February these are all moves in the right direction. Nevertheless, we'd say, and particularly having observed what happened in Kazakhstan the last few years, we're still early in transitioning to a sector that's more open to foreign mining companies. Kyrgyzstan's an interesting case because there's been a very radical shift. We now see a president who's embracing foreign investment, but we'll have to see how that plays out, given that people still remember the fallout over Kumtor, and it was not so long ago that communities were rioting against mining taking place in many places. Tajikistan is now more on the Western radar than it had been. I think the scare over export restrictions, antimony from China, has placed some focus on Tajikistan. Chinese have had some first mover advantages there with deals done on gold and silver, but there is space for adventurous juniors like Vast Resources that we're probably talking about a largely unreformed Soviet-style framework. So 4 different countries at different stages in the reform process. And I think one has to watch very carefully, hope that the commitments made in public will be followed through and implemented effectively. I'm going to skip over this data-rich slide. It was basically a series of slides you may be able to look at in your own time, perhaps take a photograph. Various data, mainly from Kazakhstan, assembled to demonstrate that we're only just beginning to see signs of rising foreign investment. We've got charts on net FDI flows into the Kazakh mining sector, exploration budgets with quite a big increase for this year being talked about. I would emphasize one chart right in the middle, the top, which is the history of discovering giant and supergiant deposits in Central Asia by decade. And basically tells the story that apart from 3 deposits in the early part of this century, all the big world-class deposits predate the 1980s. That's when exploration was turning up really exciting deposits. That has to be changed. Central Asia is not spending the sort of money that needs to be spent on exploration by comparison with other countries. But I'll move on because I'm aware of time. So we have some common challenges across the region, and they call for, to some extent, common solutions. I've clustered these into 3 groups. But again, given the time that's against us in so many important talks, I won't go through line by line. But I would highlight that the problem areas, insofar as they are problems, would be some ambiguity about the role of private foreign investment, particularly vis-a-vis national champions, whether those are SOEs or groups, domestic groups, oligarch-type groups of mining companies. There are limits on access to geodata and on subsoil rights. These are being addressed certainly in the new subsoil code of Uzbekistan, but as we've seen in Kazakhstan, converting that into a truly open a playground for junior explorers, that's going to take some time. And finally, there are a range of impediments to competitiveness that are associated with the fact that the industry still bears legacies from the Soviet era, which act as liabilities, which must be managed very carefully. So the World Bank is engaged in supporting governments across the region. We do quite a lot of analytical work. We do provide some grants, and we're in discussion about possible loans. So the last slide is basically the World Bank pitch, but I'm not really here to do a pitch. But we are looking forward to building on the conference to continue with our dialogue with government officials, with companies, and with academic institutions and researchers. Thanks very much.
So quickly, moving on to Mario Stan, CEO of Central Asia, Franklin Templeton. I think that would be an interesting with the activities that you have.
Thank you very much for the invitation, first and foremost. Thank you for the invitation. Because the topic of the session is attracting capital into Uzbekistan. I'm very happy to share with you some of the details regarding the National Investment Fund of the Republic of Uzbekistan, which has been recently set up by the government, and Franklin Templeton is the trustee and manager of the fund. The fund was set up in late 2024 by transferring significant minority stakes in some of the largest state-owned companies in the country. The fund has been valued at $1.7 billion. And the establishment of this vehicle is really meant to provide a one-stop shop for institutional investors to access Uzbekistan because of the structure of the portfolio. I'm trying to flip the slides, but it doesn't look like it's working. Yeah, there we go. So the fund comprises of 18 companies in key sectors of the country. We have exposure to the energy sector. We own a stake in Uzbek Hidroenergo, thermal power plants, electricity distribution and supply, electricity transportation, gas distribution and supply. We own 3 banks currently in the portfolio: Halk Bank, Microcredit, and Business Development. We have exposure to the transportation, logistics. We have a stake in the airport, which you all flew into. We own a stake in Uzbekistan Airways. Some of you flew here with the company. And then post office, railway infrastructure, commodity exchange, insurance through Uzbek Invest. It's a really well diversified portfolio. Now, our job as trustee and manager of the fund is to really work and transform these assets. So we have my team that's working on strategy and transformation plans for each of the 18 companies. We have the governance part of our mandate because we have the ability to change the corporate governance, the way that the supervisory boards operate in all the state-owned companies in the portfolio. Because we can appoint, in addition to my team members, independent directors, at least 2 for each company, more in those assets where we own, for instance, 40%. And finally, the focus is to complete initial public offerings. The first one will be the IPO of the fund itself, and we've already started working on that with a view to list the fund on both the local market and an international stock exchange by Q1 or Q2 of next year. So we've already hired equity advisors. We've recently engaged legal advisors, and now we're in the process of appointing the investment banks for the transaction. Following the listing of the fund itself, we will be focused on also bringing state-owned companies in our portfolio to the market. And there is a presidential decree which effectively calls for the listings of 7 companies in the fund, which is terrific because it does give us the ability to move some of the assets from the unlisted part to the listed part and have a market valuation. And this slide shows you which companies are going to come to the market over the next 3 years. First one is going to be the Airways in the second half of next year. The electricity transportation company, Uzbek Telecom, the hydropower company, and some of you may know our experience in Romania was to first of all transform the hydropower company of Romania and then bring it to the market in 2023, which was the largest IPO in Europe after Porsche, third largest IPO in the world. And this was a company that 10 years ago was valued at zero. When we did the IPO, we listed it at a market cap of $12 billion. So we created a significant amount of value for the government. It's terrific to have this type of visibility for investors that there will be liquidity events at the portfolio level. In terms of our track record, because I mentioned Romania, you can see here the fund that I helped manage in Romania since 2011. We listed it on the local stock exchange, on the London Stock Exchange as well. And we returned about 10 times in local currency, over 6 times in US dollars. We've distributed around $7 billion of cash buybacks to the fund's shareholders. And the share price over that period has exceeded the Standard & Poor's 500, MSCI World Index, as well as the local capital market index. So the mere establishment of the National Investment Fund itself should really show you the type of commitment that the government of Uzbekistan has towards reform, because it's a major step forward in bringing more transparency to the state-owned companies, more disclosure, better governance, and improved operations, because the economy of the country has developed, is diversified quite a lot. And our job is to really make sure that the state-owned companies, at least those in our portfolio, start operating like properly run for-profit corporations rather than state agencies, as it's sometimes the case. And once we're able to successfully transform them, improve the governance, then we can bring them to the market. So the investable universe in Uzbekistan is going to grow quite significantly over the next 3 years through the listing of the fund itself, through the listing of the portfolio companies, and then the other companies that are mentioned in the presidential decree, Navoy Iran, Navoy Mining, and a lot of other companies. From my perspective, it's been great to see, because we've started marketing the fund and educating investors, because there's been, up to this point, there's been no issuance of equity outside of Uzbekistan. I think there's been a lot of success, and you've referenced it, a lot of success on the debt side, but the markets haven't been tested on the equity side. And the listing of the UZNIF is going to be to do just that. And I think through our track record in managing this type of a sovereign fund, we've managed to attract a significant number, over 400 institutional investors in Romania. They've done really well. They're very excited about Uzbekistan because of how the economy has progressed, the reform process that's undergoing, and it's still early days. GDP per capita is only $3,000, and it's expected to grow exponentially from here. So investors are very, very excited about getting exposure to the equity markets of Uzbekistan through any means. UZNIF is going to do that, Navoy Mining is going to do that, and then the other portfolio companies. And for me personally, it's been great to see, when we started the education process a couple of weeks ago, engaging with investors, of how much excitement there was. We've already received interest from potential cornerstone investors, which normally is very early in this type of a process, but it really shows you that investors are eager to get exposure to the country. And I think our IPO should really pave the way for the future listings of all state-owned companies in our portfolio in the market, and should really contribute to developing the local capital market. Because, as I mentioned, one of our goals is to do a dual listing. So at the same time, on the Tashkent Stock Exchange and an international stock exchange, I won't mention which one at this stage because that's really the job of the bankers to recommend what the best venue is. For instance, for the Romanian fund, we did a London listing, which I think worked really well in promoting the country, putting Romania on the radar of all global institutional investors, and I would expect that to be the case here as well. I think from a return profile, given how committed the government of Uzbekistan is to continue the reform process, how committed it is to improve the corporate governance, the transparency of its state-owned companies, but most importantly, the way that they operate, I think UZNIF has an even better return profile than any other country funds that is listed in London. I'll pause here as I know there's other presentations, but I'll be happy to take any questions.
Yeah, thank you, Marius. I think this is a great initiative. I think this will be a significant catalyst in deploying private capital to Uzbekistan after these IPOs are successfully done. My dear friend Mansurjan Rasulev, Acting Director, Investment Promotion Agency. For those of you, a couple of weeks ago, if you have come to Tashkent International Investment Forum, the incredible success of that forum, here's the leader, Mansurjan.
Thank you for the introduction, but I have to say it was the tremendous job of the Ministry of Investment, Industry and Trade, and it all was possible because of the unwavering support and commitment of our senior leadership, including His Excellency, the President of Uzbekistan, Shavkat Mirziyoyev, to embrace foreign investment and to not only say, but also show in action how committed we are to foreign investors. Thank you again. In my presentation, I will walk you through the reform agenda that Uzbekistan has implemented since 2017. And I'm not an expert in this sector in critical minerals and mining by no means, but I will try to put these reforms and the changes that were happening in Uzbekistan into the context of the critical minerals and mining. So when this reform agenda started back in 2017, our president has executed perhaps one of the most important reforms, which is the reform of the foreign currency exchange. So for those of you who are not aware, back in the days before 2017, foreign companies and local companies were unable to exchange their revenues in Uzbek soms into US dollars for further repatriation. You can, of course, imagine what a barrier it was to bring foreign investment to Uzbekistan. And although there were so many people and stakeholders against this reform, the sheer political will was the factor that took us over this reform. Back then, I was serving at the National Bank of Uzbekistan, and it was a very difficult time when it was really hard to assess if our banking system will survive the twofold increase in the currency exchange. We established a business ombudsman office, and the next year in 2018, we doubled down on foreign trade liberalization. And although Uzbekistan is not a member of the World Trade Organization yet, we did not delay this process. We started executing it right away with the drastic reduction of tariffs, and we also digitalized the process of customs clearances. We are introducing the single window online system. We also adopted a law on investment and investment activities, and it's a very important piece of legislation since it was the first law in the history of modern Uzbekistan, independent Uzbekistan, that featured specific guarantees for foreign investors, a go-to piece of legislation for foreign investors. We established a Foreign Investors Council under the President, which is a platform where foreign investors meet with the President, with the senior government officials, and they talk to our senior leadership. They advance their proposals on how to further enhance the investment climate. And it's another recognition that our government, our senior leadership, they do understand and they acknowledge the fact that these are the people who know the best what has to be done to improve the investment climate. I used to work for the Foreign Investors Council under the President of Uzbekistan. And just a small story. So we have this protocoled part of the session with the president. Everyone knows when and what they should say, what the reaction will be. Let's call it the protocol part of it. As soon as we were done with the protocol part of it, the president said, all right, done with the officialities. Now let's talk. And he engaged foreign investors in an open discussion, which we were very anxious about because we did not prepare for it. But it went so well that foreign investors were actually able to witness themselves how open and committed our most senior leadership is. I will not bore you with every single reform that our government has executed. I will just highlight the decree on privatization of large state-owned enterprises in international markets. The great job that the Uzbekistan National Investment Fund will be carrying out is very important. Not only for reasons that Marius has already mentioned, by bringing more capital into Uzbekistan, by providing foreign investors with a specific investment vehicle, because let's face it, not all investors want to come to Uzbekistan and build a factory or set up a shop. They want to take advantage of a liquidity available on emerging markets such as of Uzbekistan, and they want to have exposure to Uzbek market without actually going directly into the market. And it's a great way to do it. But there is another perspective on how the Uzbek National Investment Fund can drastically improve our investment climate and make our work at the Investment Promotion Agency much easier. You cannot compete with the government, and that's the harsh reality. It is extremely hard to bring a foreign investor into the sector when you have a domination of a state-owned enterprise. And only by divesting the government government stake in many of the sectors, you can then expect that it will flourish through competition, through attraction of foreign capital. And we do understand that some of these enterprises, they're strategic, and it's very challenging to divest for the government. And I think it is the best way to divest from these sectors while making sure that you do not harm the economy, you don't harm the sectors, and you end up with flourishing and competing sector. On tax policy, the approach of the government was twofold. First was the drastic reduction of rates. So Uzbekistan is very competitive now compared to emerging markets, but also developed markets. But the other pillar of our tax reform was the tax administration reform. Businesses in Uzbekistan, they do not visit tax authorities' offices. All the interactions between the physical and legal entities is done through an online system. It wasn't done only to streamline the process of interaction between the businesses and tax authorities. It was also done to eliminate corruption. Uzbekistan is not a member of the WTO, but it will become by 2026. It's a milestone set by the president, and our negotiations team, accession team, is well on track to meeting this goal. And it is important to talk about WTO accession, in my opinion, from the investment attraction standpoint. We keep asking the question, what is the unique value of Uzbekistan? How do we stand out among other great emerging markets? And there are many factors that we usually like to, pitch, that we talk about. It's the cheap labor, great tax policy, great investment climate. But honestly, there are so many other emerging markets that can offer similar conditions. But what Uzbekistan is unique is the unique position in the history. And just to make it clear, what I mean by this is that Uzbekistan has been a closed country essentially before 2017. When we started these reforms, international community, including investors, were skeptical. They always had reservations, expecting that Uzbekistan can revert back to the status quo any moment. So it took us several years, in fact, 8 years, to show that we're actually committed and we're on track with liberalizing our economy. And we're not members of the World Trade Organization yet. So whatever investors come to Uzbekistan between these periods of time, before we become a member of the World Trade Organization, they will be able to take advantage of a window of opportunity, as we refer to it. These reforms were actually not just on paper, they brought significant impact. I will not bore you with the statistics. I just want to point on the numbers on foreign investment attraction. So back in 2017, we attracted about $3.5 billion of foreign investment. And this number grew tenfold by 2024. Last year, we recorded 34.9 billion of foreign investment. And it's a tenfold increase, and it's a momentum that we want to maintain. And the question is, how do we do that? With so much interest in Uzbekistan now, we see a lot of investors asking us, what are the investment opportunities beyond production, beyond building factories and building facilities? They're looking for investment vehicles. And this is a challenge that Uzbek government is trying to address by creating multiple options to bring the equity and serve as asset management vehicles here in Uzbekistan. Going back to the critical raw materials, you know that Uzbekistan has all of them, essentially. And the challenge has been and still is that for the raw minerals, it is essential to have access to the sea. Because it's extremely ineffective to transport critical raw materials in a raw format if you don't have access to the sea. And Uzbekistan is not just landlocked, it's double landlocked. Neither us nor our neighbors have access to the sea. So how do we address this issue? With the buildup of interest in the critical minerals, the government of Uzbekistan recognized that the only way for us to compete in this domain is by doubling down on investment in added value products. So we don't just mine, we don't just refine, but we produce half-ready and ready products that can then go out and compete on global markets as the share of a logistic cost diminishes. I will not bore you with every single detail in every single presentation. Here, I was supposed to talk about Uzbekistan National Investment Fund, but I will not because everything has been already covered by my colleague here, Marius. The Investment Promotion Agency is an agency under the Ministry of Investment, Industry and Trade. Our mission is to help foreign investors navigate the legal landscape, assist the market, and establish their business here in Uzbekistan. We help with getting the market intelligence, getting their registration, and something that we are developing these days is establishing an aftercare service. As we recognize that the people who we should be paying the most attention to are the investors already working in Uzbekistan, because these are the people who will be bringing more investment in Uzbekistan. I think that's it. Thank you.
Thank you very much, Mansurjan. Our next presenter, Savera Madgazieva, Deputy Head of UK Export Finance for Central Asia.
Thank you very much, Mr. Han. I'm really pleased and delighted to be here alongside distinguished speakers to speak about UKF and its available financing offer for Uzbekistan. Just in addition to UK Ambassador Timothy Spart's speech, who mentioned about UK Export Finance, I would like to provide more detailed information about our organization. So we are a fully UK government department. We are working under the direct supervision of His Majesty Treasury. And our capacity, global capacity, has been increased starting from this financial year for additional 20 billions. So in overall, our capacity is going to be 80 billions. Here is the statistics represented for the previous financial year results. We are waiting for the announcement of our annual report. So based on that statistics for the previous financial year, we have extended nearly 9 billion export guarantees globally. And our exposure was 52 billions. And what makes UKF offer unique among other ACA's offers? We are being considering ourselves as one of the most flexible ACAs in the world. So we are providing 100% coverage for the 85% of the project cost, and our support can be for the 15 years, including construction period. And for the projects which are under clean growth and the renewables, our guarantee can be extended up to 22 years. So for Uzbekistan, we have a pretty substantial capacity. Our limit is about 4 billion pounds, and our support can be extended in all hard currencies. We are working with the team based in London, which are showcasing in the screen. And how can we assist or cooperate with the companies here? We can cooperate as state-owned companies with the private businesses and the ministries. We can do transactions with the sovereign guarantees, with the corporate financing and the project finance schemes. So whether it is corporate project or corporate deal, we will consider their financials. And one of the crucial requirements for us to be eligible to be involved with any kind of project, there is certain requirement of the UK content in the project, which should be at least minimum 20%. So, sorry. Here I just would like to showcase how our pricing is being considered by the international banks. As you can see, there is a huge portion which international lender allocated for the risk. So since UKF cover is 100%, so that risk became to the zero. So substantially, the final all-in cost decreases almost in double. And by end of last year, we have announced a new product, which is focused on the supporting for the critical mineral supply finance. So this is a new product. We haven't realized any project so far globally, but we are very much keen to do more, to be engaged with the mining companies here in Uzbekistan, in the wider Central Asia. So here we can provide a guarantee up to 100%. So it doesn't mean that it could be 80%, 90%, but and we will consider this support vice versa. So we will provide the financing for the Uzbek companies who will provide or export critical minerals to the UK. So, yeah, so here's a scheme how this product can be implemented. Yes. Yeah, and I'm proudly to say and announce about our first ever transaction, which was realized last year with the MINEX. So, as ambassador also mentioned, it is a 100% guarantee. It is corporate deal without involvement of sovereign guarantee, and it was direct lending. So, which is also implies to the final all-in cost, so without involvement of the local banks. So this is a kind of unique transaction for Uzbekistan, and we are very much interested to do more in the country, and we are like having UKF representative on the ground. It's another indicator of the UK government belief on the country potential growth, and that it's huge opportunities, untapped opportunities for the UK companies here. So please feel free to reach out if you need any more clarification or discussions. Thank you.
Thank you very much. The next presenter is Benjamin Godwin, partner in Prism Strategic Intelligence.
Thank you, Han. Good afternoon, everyone. Just as a quick introduction, Prism, we're a strategic advisory firm based in London, although we spend a tremendous amount of time in this part of the world. We're advising clients largely in the investment banking and capital market sectors, and of course mining, and we have quite a strong specialization in Central Asia. I wanted to talk, given that this is MINEX Central Asia, a little bit about the region, but really focus on Kazakhstan and Uzbekistan, although Brian rightly pointed out that there are some interesting developments happening now in Kyrgyzstan as well. And just sort of take a step back and have a look at where Uzbekistan and Kazakhstan are now and what the challenges are that they face, and what is being done to meet these challenges, and also look at the investment climate from the perspective of foreign investors, essentially our clients, and the feedback that we get from our clients. Clearly, mineral resources are critical to both Uzbekistan and Kazakhstan. They're 50% of Uzbekistan's exports and 30% of Kazakhstan's exports. Kazakhstan also has a very large oil and gas industry. But certainly over the last few years, we've been entering into a new era of their development, and also a new sort of geopolitical era compared with the 1990s and the 2000s. And And there's a whole set of categories of risks and opportunities that we need to be thinking about when we're looking at this region. And clearly, the geopolitical risk has grown exponentially in the last few years and the last few days and weeks. This is making it extremely difficult for investors to look at Central Asia. We've worked with clients in the uranium industry that are trying to get access to the region, but are concerned about the security of exports. We've talked about export routes on this panel. So that is creating real challenges for investors and making them have a second look at the region. It is also certainly creating opportunities for Central Asia as well. We've seen unprecedented cooperation between Central Asian states, including economic cooperation, which is very important, and we'll get to critical minerals in a second. The other thing, and Brian pointed this out really well, is competition from capital. It's quite interesting, actually. This region in the 1990s, there was only sort of one core source of capital, and that was Europe and North America. But that has changed radically over the last 10, 15 years. There's all sorts of sources of capital available from around the world, be it China, be it the Gulf, and a proliferation of new international financial institutions willing to support, including local regional bodies looking to support development. But that competition for capital is getting even more intense, and it's getting extremely difficult for particularly smaller countries to access this capital. Within Central Asia, we're seeing generational change. We've seen change in leadership, but we've also seen changes within the populations. And so, for example, in Kazakhstan, we're seeing growing demands for national control of natural resources for obvious historical reasons. And in Uzbekistan, the real challenge for Uzbekistan is maintaining growth and development. The statistic that I keep in my head the whole time is that 600,000 people return at the age of 18 every year in Uzbekistan. And these people need jobs, they need educational opportunities, and they need the opportunity to develop a life for themselves. And the challenge of Uzbekistan is, as Mansour John said, is the fact that Uzbekistan has been quite closed over the last 30 years and has suffered from underinvestment. The other issue, of course, is related to the geopolitical situation, is the growth of the critical minerals agenda, and this is a huge opportunity for the region, and obviously this is why this has dominated. This is why it has dominated the discussions today. But I also don't want to forget uranium. So approximately 45% of the world's uranium is produced in this region. 7% of the world's uranium is produced out of Uzbekistan. And there's a tremendous opportunity here. We've seen joint ventures with companies like Orano, and President Mirziyoyev has set out a target to double uranium production to 7,000 tons by the end of the decade. So there's huge opportunity here alongside the risk. And we have seen, to quite a large extent, both Uzbekistan and Kazakhstan stepping up to reform and adapt and both mitigate the risks and seize the opportunity. I think it's fair to say that both have made clear commitments to market-oriented reforms. In the case of Uzbekistan, as we've been discussing on the panel, the real focus has been on capital, getting capital into the market, and that makes absolute sense. If you've been closed off from global capital for 25 years, there's a huge amount of underinvestment and a lot of capital that needs to go in. We heard this morning that Al Malik is planning to spend $13 billion on capital investment by the end of 2030. That's an absolutely enormous sum of money for one company to take on, and this is reflected across the entire economy. So we've seen obviously the new March decree on IPOs of these firms, which has been very impressive, and of course the initiative on Uzneft to get new capital into the country. In Kazakhstan, really the focus has been on subsoil. Kazakhstan has been more open to global capital markets over the years. Back in the 1990s, there was clear need for both capital and technology to get the big oil fields up and running. But we've also seen a greater degree of privatization in the mining sector. The challenge for Kazakhstan is slightly different in that its resources are depleting, and it rapidly needs new exploration and development. And so the 2018 Subsoil Code has done a tremendous amount to advance that need. Just a quick fact from the World Bank: in the 5 years following the adoption of the Subsoil Code in 2018 in Kazakhstan, 1,900 licenses were issued to junior mining companies, and 800 junior mining companies have been registered as active in Kazakhstan. But I think it's fair to say, and certainly speaking with our clients, there is still a tremendous amount to go forward. And one of the key questions that I think that both countries are dealing with is what is the correct balance between state, investor, and society? We are in an era of national companies, national oil companies, national mining companies, and that seems to be the preferred model both in Uzbekistan and Kazakhstan largely. But the fact is that the amount of capital that is required if these countries are going to seize the opportunities of the critical minerals revolution on the next generation of mining assets, it's just not enough to do without private capital. And so Kazakhstan, the state is spending sort of 200 to 300 million a year, I think, on exploration, and Uzbekistan is a little bit behind, but not too far off of that. Those are impressive sums of money, but they're just simply not enough to really seize the opportunity going forward. And so we do need to see more of this reform and more of a focus on getting this capital in if the countries are going to seize the opportunity. In Uzbekistan, one recommendation that we would like to see is expansion of the Subsoil Code that was adopted this year. The concept of first come, first served was introduced, and that is very welcome. But we still have very much a hybrid system of both state entities doing exploration and development, an auction system, and a first come, first served system. And so certainly when we speak to investors, they say, well, particularly on the junior mining side, we're looking at Uzbekistan, but really the assets that we want to see available in terms of licensing are not available yet. In Kazakhstan, the subsoil reforms of 2018 have been very impressive, and as I said, have brought real results. But we are seeing fresh demands from the state for things such as technology transfer, required investment in secondary industries, basically forced investment into industrial policy, which is making investors rethink. And we are seeing some of those subsoil reforms being wheeled back. And increasingly, there are mandates for state-owned enterprises, both in oil and gas, in mining, and in critical minerals and uranium, to take strategic stakes in key assets as the government sees fit. And that is certainly a concern that our investors would like to see more clarity on. I'll hold on there, but if there are any questions, more than happy to discuss. Thank you.
So our last presentation is from Jihangir Kazanov, Deputy General Director for Economic and Finance from Novoye Mining.
Pожалуйста, Jahangir. Dear colleagues, dear participants, Forum MINEX, happy to welcome you on behalf of Novoye Mining Complex, one of the champions in the country and one of the world gold production leaders. Today I would like to share with you our experience on transformation and key achievements that we have realized in the past years. Novoye Complex is more than 65 years of leadership. Today we are number 4 producer in the world of gold in the world. and the largest industrial enterprise in Uzbekistan, with input of 6.5% into GDP of the country. The gold that we produce have certificate good delivery from DMA. Our company is a large taxpayer and tax employer in the country with over 50,000 employees. Our company is a unique enterprise. All production facilities and mines are on the territory of Uzbekistan. In 2024, our production has achieved historic maximum 3.1 million ounces of gold, and the revenue by the end of the year was 7.4 billion US dollars. At the same time, we are ending the production cost and the production based on last year total cost on production and maintenance of ISK was $779 per produced ounce, and we are in the top leaders among the analog companies. Our company is an enterprise cluster which has comprehensive vertical integrated structure from exploration to affinage. We have large licensed areas, and today the production is held at 12 large mines. In the composition, there are 7 hydrometallurgical plants and 2 shops in alkalization and enrichment plant as well. Today we have own production on design, construction and production of equipment and spare parts, which enables us to effectively manage costs, make urgent decisions and support high level of profitability. This slide demonstrates a number of our competitive advantages. First, our company has all production capacity to remain the status of largest gold producer in the region. Our resource base is assessed at 146 million ounces. 65 million ounces are mineral deposits. Our company continues to develop and enhance the scope of production through to realized investment projects. Financial policies aim to effectively distribute capital with low debt level, debt burden. We are playing a strategic role in the economy. As of 2024, about 21% of budget goes to Navoi plant. In the past years, we have passed a number of important stages of comprehensive transformation aimed to increase efficiency, competitiveness, and adaptiveness to changed market condition. The graph reflects the achievements of our company, particularly in 2019. We produced the first IFRS report. In 2021, we separated gold, uranium, and other non-profile activities. As a result, we established a joint stock company. In 2021, we made a loan agreement with the syndicate of international banks with the amount of $1.2 billion. In 2024, for the first time, we got credit ratings on the level BB minus from Fitch and S&P. Same year, we placed bonds in the amount of $1 billion at the London Stock Exchange. In February this year, for the first time, we've got ESG rating from Sustainable Fitch Agency on level of 3. In May, we successfully had another issuance of bonds, Eurobonds, with an amount of $500 million. 2024 could be set as a year of historic achievements. Last year, we obtained first S&P rating, BB minus, with a positive forecast. And the worthiness rating was BB plus, which reflects good forecast and little credit leverage. Also, we issued Euro bonds in total volume of $1 billion with 2 tranches, with a term of 4 and 7 years. Total was $5 billion. It exceeded the initial application of 5.5, and It was the largest transaction among the issuers in 2019. In May, we repeated our success through another issuance of the bonds for $500 million with term of 5 years. It was high interest from investors. The book exceeded $2.3 billion, which 4.6 times exceeded the placement volume. We understand the importance of sustainability in development. In 2025, we've got sustainable rating, ESG rating, which reflects the high level of corporate governance. Our key asset, Murundao mine, is one of the largest mines in the world, gold mines. The mine was discovered in 1959, production started in 1969. Resource base of the mine is 101 million ounces. Currently, we implement prospective investment projects. One of the projects is aimed to increase the gold production related to production and opening of fifth line in Murundao mine. We are intending to increase the scope of processing at the second metallurgical plant more than by 15 million tons.
According to the mineral resources, it was first place in the world with the average 1.0 gold, and it's 146 million ounces, which is going to Murungtao Mutinbai complex. Operational indicators. The investment program is playing a huge role in the NMMC activity, and we have investment projects which are being undergone right now, and it's about the persistent volume and also giving new job places, the volume of excavation, and also we have the production volume since 29 till 20, it's like plus 32% growth, and also we see like more in 2016, there was a big program was adopted on the processing precious metals, and but the results of which by 2016 it was the volume growth, and the program was the result of the program was very impressive. It was 50% of growth, and it gave us opportunity to go to this seventh position in 2016 to the fourth place on the gold according to 2024 results. And it's also noteworthy that we adopted new program on growing volume for 2025-2030, and it is for increasing production of precious metal plus 30% growth. And this Inca is giving very place. And as I said, by the end of this 2014, it was good with a second place on the production. We only give place to Polius, which is 667, and our is 979. As you can see from the slide, sustainable performance and attractive financial policy. We can see here the operating margin, adjusted EBITDA. It's not 2020 2.7 to 4.5. So the EBITDA and margin is also increasing. It's also sustainable. It's around 50%. And also we can see the maintaining leverage below the target level of 1.0. Multiply EBITDA, which is showing the financial positive performance according to the 2024. This is 0.5, and it's showing that it is quite sustainable, and it is giving trust for investors and constraining the positions on the market. In conclusion, the NMMC experience can show that how the national company can become a international player by giving sustainable growth. Today we give sustainable growth, and we maintain high marginality, and we also realize programs we want to keep not only leadership but also to go forward because of innovation, partners, and sustainable usage of resources. We are open to partnership, and we are sure that the future will be built on the trustworthy partnership. Thank you.
Thank you. So this concludes the presentation part. We have three additional panel members. Just in the sake of time, Stefan, Cassie, and Albert, can you just take a moment and introduce yourselves, please? Stefan, starting with you.
Thanks, Sam. My name is Stefan Scholz. I run an independent investment bank with focus on Central Asia. We've been active in the market since 2008, essentially moving from London from a large global investment bank to do the first large dual listing IPO and privatization of a Central Asian company, the National Company of Kazakhstan. We've done a number of transactions since across different industry sectors with a track record of about $60–70 billion in transactions since. And we're very much focused here on Central Asia, have actually been active in Uzbekistan since 2007. Thank you.
Thank you. Cassie?
My name is Cassie. I'm really proud to be a part of this panel. Alphamar is the team of international experts who are launching the private equity fund in Luxembourg this year, and our primary focus would be on critical raw materials, and copper and gold in particular. And from geographical perspective, we aim to invest in Central Asian region, and primarily also with a focus on Kazakhstan and Uzbekistan. Thank you.
Thank you, Cassie. Albert?
Hello, everyone. My name is Albert Ganyushin. I'm based in London. I'm visiting Tashkent. I'm grateful for the opportunity to speak at this event. My background is approximately 30 years in global capital markets. I currently work as an independent advisor on IPO and capital markets matters. In addition, I'm a chairman of 2 listed companies on the main market of the London Stock Exchange. And my career includes long periods of working for leading global stock exchanges, such as the New York Stock Exchange and Euronext, running their listings businesses, working for an investment fund, investing in alternative assets, and also investment banking, M&A, and equity capital markets transactions based out of London for around 15 years. Super interesting for me to visit Tashkent for the first time and look at what is going on from a completely unfettered perspective, frankly. So unlike most people, I think my colleagues, I don't really do currently yet any work in Central Asia, but I do some work in Turkey. This is as far as I've gone. And frankly, it's a fascinating place. And I've had the opportunity to meet people in Tashkent, being here for a couple of days beyond the conference, including in the government and positions of influence. And I think the government's commitment to reform is amazing. And in particular, Mr. John, I would like to say that the initiative with the Foreign Investor Council, I think, is an extremely sensible way forward. I had an opportunity also to learn about the specific things that the government is focusing on as the next step of unblocking kind of issues from the foreign private capital perspective. As you know, those are 3 main areas: are alternative investments, private equity funds, corporate governance, and corporate responsibility. Those are 3 main areas that are kind of fall within my, if you like, area of expertise and interest. So I think you've done amazingly well so far, but I think the road ahead is ever so longer and ever so greater. Because as many people pointed out, if we're talking about private capital here, the competition for private capital in the world is extremely intense. And it has many, many levels. It's like a video game with 100 levels, and maybe, Uzbekistan is on level X, and there are many, many more levels ahead. So it's a non-stop ongoing process. But I think the commitment and what you've done so far in the amount of time you've done it is pretty amazing, but a lot more work lies ahead.
Thank you, and welcome to Uzbekistan. And I think we're going to see you more and more, because that's what happens when you first come to Uzbekistan. I did prepare questions, I really did. But seeing you all financial people here, I do have a question related to critical raw materials. So what I'd like to do is I'd like to take you down a logical path. Well, it's logical for me. Maybe it's not logical for you. So they're called critical raw materials. They're not called important raw materials. They're not called essential raw materials. The word critical is deliberately selected. The public capital, compared to the past, is more deployed, more available. But as Albert, you mentioned, what is very, very tight is the private capital. The approach to critical raw materials continues to be traditional project finance. So the public or the debt component is there, but the equity component is the missing piece. That's the tough part of the equation in financing. If you look at the capital markets, yes, they have been classified as critical, but if you look at the capital markets and companies that have been in the capital markets that are focused on critical raw materials, the capital markets don't really recognize these to be critical because the valuations are extremely low. There's a dominant force that could easily manipulate the market and could easily manipulate the prices. So the criticality of these commodities have been basically established by the governments. So why not fund these critical raw materials by the public capital, which is policy driven rather than capital driven? So I'll throw that question out there. Again, what I'm puzzled with is if this is critical to governments, then why don't they fund it? Yeah, go ahead.
Can I start? Just to be slightly provocative, what does it mean critical materials? It's not that they're particularly rare. You can find a lot of things in a lot of places. You can extract them in different costs and in different volumes. I'm just taking the devil's advocate approach, okay? So from a global investor perspective, you can do this in a number of different ways. I think when we say critical, in many ways, it's not a technical, chemical, or geological definition so much as in political, frankly. So development, what new resources are required for technological breakthrough and where they're available and at what cost. So that's what makes them kind of a lot, critical from many points of view. So, and I think that creates enormous volatility in the end markets from the investor perspective. What is critical and is acceptable cost, for example, today may not be tomorrow, and the investment may turn south and sour. And I think this is the issue. So I think we're living in such an uncertain geopolitical time. Somebody said to me, the corridor flying west to east, I came here by airplane, over Turkey is now narrowed down airspace to about 100 kilometers. It just gives you an idea of how squeezed everything has become. And maybe some of those materials we would not be talking about them if they were available from certain countries at certain prices, etc., etc., etc. So that I think is the important dimension. I'm not beating down your point, I'm just making an alternative viewpoint to start a discussion.
Well, thank you. Any other comments, Stefan?
I think it might help to put it in perspective. Metals is not the flavor of the month or the year or the century. There is in public markets certainly an issue of perception and of fashions. I think everybody has been following the Tesla share price or Microsoft or, a century ago, Nokia. These are products, these are companies that everybody talks about, everybody can feel, drive, or uses and has a certain perception about. I've seen, particularly in Central Asia, that the mining sector over the last 10 years, maybe, slightly more, simply lacked investments, lacked attention, because people were drawn to other areas, particularly technology stocks. People recently were also drawn about ESG, environmental issues. So mining has not been a very sexy, if I may say, topic on the stock market, which you can see A, in lack of investment, B, which you can even see further in terms of lack of staff, lack of skills, lack of people that actually want to study mining and go into dirt, literally. So from that perspective, I think it is easy to understand that even if it is critical, even if it is rare earth metal, that obviously we all know are not really rare, there's a lack of focus on it. So ultimately, governments had to step in and realize without these materials, our industry doesn't work. We can't produce, the Nokias, that doesn't exist anymore, the Teslas and everything else. And what I see, for example, at the moment is that based on the action that was taken by governments, initially, for example, the US government coming up with a list of critical raw earths, the European governments and the European Union, which recently had a long, big government meetings here in Uzbekistan, showing that they want to help, that they will invest and want to invest. Based on these government initiatives, what I do see at the moment is there's more funds, small funds, medium-sized funds that actually are now coming back into the sector and looking at it because they see it's actually interesting, there is money made, but obviously also the investment cycle is potentially 5, 10, 15, 20 years.
Yeah, agree with you. In fact, Cassie sitting right next to you is that equity fund. So the criticality of these commodities, Stefan, just like you mentioned, at least my understanding is it is critical for the manufacturing industry in advanced economies where it is the driver for that economy. If it is, if the governments are not going to pay it, why doesn't the end users pay it? And when I say pay it, I'm talking about project finance. Why don't they fund the entire capital needed for a particular mining asset that they need the critical raw material that will be coming from that asset?
I think, again, the problem is in Western capital markets, equity capital requires a return.
I'm not talking about equity. I'm saying, why doesn't the public capital, which is policy-driven, controlled by the government or the state, why don't they fund it?
They don't see themselves in the Western system, in the Western setup as providers of equity capital.
Then
we
why
fundamentally, in London and New York, believe in private capital to do the work for us. That's the short answer to your question.
I understand about the confusion that I have, and I'm really struggling with that. Then why was it classified as critical?
Pardon?
Then why was these commodities classified as critical?
Yeah,
by the governments?
They're important. We need them. But I think, this is kind of in a way, I have to go back to the previous answer I gave you, right? Mining overall, from an investor's perspective, is not really so much a revenue gain because they're commodities, right? The fixed time, the price is fixed. It's a cost gain. So an equity investor always prefers to invest in the largest, lowest cost commodities companies. which is so important. Malloy just made a presentation and said we're the fourth largest in the world by production and resources, and we have the second lowest cost. Well, that qualifies this company as investable to start off. If you are at the tail end of that spectrum, you kind of too high risk, because this is what I meant. So if the prices are volatile, the conditions are volatile, that means that all of the tail companies in the distribution are going to be lost cause investment, and private capital lives and dies by the returns. If you run a fund today and you lost investor capital tomorrow, you're not in business anymore. So that's just simple how it works.
Anybody from the audience want to contribute to that question? Yes.
Hakan Ardan from the MT consultancy company. It is quite interesting to hear the investment sector's view on the mining front. Also, your criticism is absolutely correct. But we are in the Belt and Road region, and this region has been initiated by certain countries. So they've got certain interests in the future. So the question is, maybe Brian can also contribute on that one. That the investment always goes to the certain regions around the world, but not necessarily to these shy regions. So in a way, there's China effect, and then the Chinese are providing all the necessary bits and pieces, know-how, and then win-win solution. I'll bring the technology, I'll bring the manpower, plus on top of this, the capital. And then they come, and then they share the resources, and then also the fruits of the investment. It is the same everywhere we see around the world. I just wanted to see how the panel sees the Chinese effect in the overall scheme of investments in this part of the region, especially when it comes to geopolitics. And then especially someone has identified the geopolitics is the key element in this part. So I just want to, take on that one, Mr. Thank you.
So we have about 2 minutes, and these will take. Yes, Cassie, go ahead.
We have 2 minutes. I'm going to be very short. In 1948, the U.S. government initiated this Marshall Plan. So the government, in particular U.S. government, can be more active when it really becomes critical. And I believe that we will see their action, obviously, because of the changes in the government right now in the U.S. and all this hectic situation in Europe. I think the governments cannot be as agile as private markets, but I'm more than sure that they will come. And the question about the Chinese investments, I mean, that's obvious that it's the Europe established its own list of critical raw materials, US, and I mean, if they are not active enough, I mean, our countries have a wonderful balancing, more neutral foreign policy, as in Kazakhstan, as in Uzbekistan. So I believe, I mean, we don't have any allergy towards working with somebody, right? Thank you.
Ilhan, just a quick comment. I think it's both a strength and an opportunity. For sure, it's a great opportunity, the position of Uzbekistan, that it's kind of everybody is interested in Uzbekistan. All the big powers are interested in Uzbekistan. And you have an amazing president, frankly, who's just managed to navigate this situation, incredibly well. That is an opportunity that everybody wants to be here, but that is also a weakness in many ways, that, the reliance on this, the way Uzbekistan plays this game grows over time. And so it's really important to maintain that. So that, again, I applaud the government for being able to play the game.
Well, thank you, everyone. Obviously, the answer to this question, this debate will go on, and I'll actually welcome to have this discussion with you in the coffee breaks or lunch breaks. But thank you for all of the panel members with your contributions. I have learned quite a bit from you, and thank you for listening.